What's going on, everyone? Welcome on into the TC Trading channel. So today we are talking about the stock market fear and greed index. Now, this is something that you've probably seen getting tossed around across social media over the past couple of months, maybe even longer. Now, I'm sure you're pretty much aware with the basics to what this means, but I want to dive a little bit deeper here in this video and talk about how you can utilize the fear and greed index in your own trading and investing and why it's actually very, very useful to do so, because it can help time these short to medium term market movements a lot better than you may think. And of course, timing the market day to day is extremely difficult, and that's where you can utilize technical analysis to get a better view of price action and whatnot, which we've got some great videos on already here on the channel. But the fear and greed index is much more emotionally driven, and this is very, very useful in times where we see market extremes, when we see extreme fear, extreme greed, extreme moves up, extreme moves down. And I think that the time we're looking at the market right now, after having one of the worst starts to a year ever in 2022, is actually very, very useful to pay attention to this, because fear and greed are big drivers in the market right now. Everyone likes to buy when things are looking better and looking up, get very greedy. And when things in news and everything looks really, really grim, that's when extreme fear can take hold. And it drove us for a couple of months pretty long. We're down in that extreme fear for quite some time. And by looking at the timeline chart right here, you'll see that really from, looks like into early May, we hit down to the single digits on the fear and greed index, which is a scale of roughly from 0 to 100. That's quite fearful. And we were in that extreme fear for quite some time, bounced out briefly, fell back into it, and then have been grinding out of that so far, at least when we're filming this video. So looking at this right now, from 0 to 25, that's extreme fear. From 25 to about 45, that's fear. And then from about 45 to 55 is neutral. And then from 55 to 75 is greed. From 75 to 100 is extreme greed. Now, this fear and greed index comes from CNN Business. And if you're going to be looking at, there are other ones out there. There's a crypto one. There's other companies and other sites that will have their own. But this is one of the most prominent fear and greed index charts and set of indicators that you're going to look at or that you're going to see getting tossed around on social media. But they're all quite similar, right? At the end of the day, they're all quite similar, and they're all very, very useful. So let's start going through this to understand how we can utilize some of these indications from the fear and greed index. They have an explanation on the right-hand side, so I'm not going to just read this over to you, but I'll kind of give you guys some summaries of some of these individual categories or individual indicators that can be very, very useful. So one is market momentum, and what you're going to notice that they have this 125-day moving average, and so when the market kind of crosses back above that, that can indicate, at least in the short term, that we're seeing some greed. Bigger picture, though, we are down a lot off of the highs. That's why this is still indicating fear for right now. Now, in terms of stock price strength, this is just going to show you stocks at 52-week highs versus at 52-week lows, which we saw a big skew to the downside in terms of so many stocks down towards those lows, but that has quickly reversed in really a very short period of time. However, underneath the surface there, here's stock price breadth, and breadth actually is a much better indication for the overall market in a lot of stocks that you and I will probably come across. You'll note that the overall indices could be looking really good and could be high, but the overall strength in the market, will note that this has been quite weak since April on. And under the surface, a lot more stocks have been way weaker than what maybe the Apples and the Googles and the Teslas and the Amazons and the Microsofts, the big boys that drive the overall indices. A lot of stocks under the surface have been a lot weaker than some of those names. The next two are what I want to finish up with and focus on here: put call options and market volatility. There's actually going to be, if there is not already on the channel, a video covering the put call ratio. Now, this is kind of one spin on the put call ratio where they use a 5-day average. Now, what you need to know when it comes to a put call ratio, because a lot of charts, a lot of these charts will actually be calculated a little bit differently and they'll have different numbers. What you need to know is look at one or two of them and see what you can find in terms of what is the difference. Are you noticing substantial differences here, or what's the overall trend? And the higher the put call ratio is, that tells us the more puts that are being bought. So this put call ratio showed us that actually, look back in here, mid-June, around June 16th, we have right here, we saw actually more puts being bought relative to calls over a 5-day moving average or a 5-day average. Now, this number is coming back down. What does that tell us? Well, when this number is actually very, very high or relatively high over the past, let's say the past year, that tells you that a lot more people are betting on the downside. So a lot more bearish sentiment in the market. And if you look down and this number starts coming down, a lot more calls are being bought relative to puts, a lot more bullish sentiment. So I don't really care that this says extreme greed right now. What I need to look at when I'm watching is when this number starts coming down substantially, that tells me a lot more bulls are getting excited and are feeling greedy, as we say. And when this number spikes up, a lot more fear is coming into the market. And these tend to be good contrarian indicators. Now, we'll cover that in just one second. Next is market volatility. This has been coming down substantially. When this spikes up, the VIX, as we say, when the VIX spikes up, we tend to like to short the VIX, meaning that the VIX will come down eventually and it provides better backside opportunities. And shorting the VIX has proven to be quite the strategy over the long term. The problem is that sometimes the VIX likes to keep on going. And during COVID, those who were trying to short the VIX early on got blown out, potentially got margin called because the VIX exploded to levels that a lot of people may not have seen. So that is obviously the downside of shorting the VIX. But this is another one of those indicators. So now let's go back to the top. There's more here. You guys can come through and read more if you want to. It's, again, just type in fear and greed. It's on CNN Business's site and you'll come to this page. So what we like to look at, and we talk about contrarian indicators. Now, in the short term, day to day, it's very difficult. But over the bigger picture, we're talking weeks to months, this contrarian style actually tends to be pretty nice and tends to work quite well when we have extremes. When we're in a market where we haven't really been seeing too much movement back and forth, and yeah, maybe we see some indicators telling us we're in greed or in fearful times, but when the market hasn't been as volatile as it's been, it's difficult. It's a lot more difficult to tell. But when the market's more volatile, it's actually really, really useful because when we get down to extreme fear, you tend to see some substantial rallies off of that. Because when everyone's one-sided buying puts, you guys understand the stock market that, at least in the short term, like 90% of traders, 90% of people are actually not making money, okay? And so when 90% are all on one side of a trade, how does that tend to work out, right? That's why we like to use these contrarian indicators, and the fear and greed could be one of those indicators that we can use to get a good feel for sentiment and where we might start to see the best opportunities. And when we have seen extreme fear or some of the worst market sentiment over the course of the stock market's history, those actually tend to be some of the best buying opportunities that there have been. When you see people get more greedy and into more of an extreme greed, those tend to be good opportunities to trim positions, to sell stocks, or even go short. Now, obviously, with the market being skewed to the upside over the past couple of decades, it's very difficult for us to say, okay, this is the top, let's sell all of our stocks, let's go short, and we're going to make money, because we know that the trend is against us. But it could be a great indicator to trim positions, to lighten up, to hold a little more cash, potentially for a time where we get into extreme fear. And that is what the whole premise of this video is all about. That is what you need to know when it comes to the fear and greed index. If you have any questions and comments, leave them down below. Like always, we'll be happy to answer them there. Tons of great videos here on the channel already. We'll also leave a link down below to a webinar covering 3 trading signals to add to your trading and investing arsenal. That's a great place to go for free. Link is down below in the video description box, like always. Make sure you subscribe, hit that thumbs up button, and we'll see you guys in a future video. Peace.